The battle between the buyers and the sellers has just begun. Welcome back, everybody, to High Quality Trades, the channel where I provide top-notch technical analysis on the stock market, where we go over simple support and resistance levels, trendline breaks, and pattern formations. And I give you the price targets of where price is headed in the coming days. So let's get into it. In today's video, we will be going over the most significant support and resistance levels on the SPY, the QQQs, and the VIX, and what you should be looking for if these levels are tagged in the coming days. So first up, we have the SPY on a 4-hour time frame. Today, October 1st, the SPY closed at 568.62. It reached a high of 574.06 and a low of 566. We were negative 0.90% on the day. Alright guys, so what is the SPY currently doing? So it looks like today the bears were able to step in early in the morning and push price lower. Ultimately, we fell below our resistance level here at 573.06. And we headed down towards our first support level at 568.91. The bears were able to continue pushing price lower, and we began to fill our gap here at 567.21. It looks like the sellers have failed today at filling this up gap. The bears needed to push price down to 565.29, but they were unsuccessful. So currently we are finding resistance at this previous support level of 568.91. If the buyers are not able to get back above this level, then it is most likely that we head down towards 565.23. And if this level breaks as support, then we will be headed down towards 561.04. We do have this ascending trend line of our ascending triangle pattern here, that if we were to fall below the 561.04 level, this ascending trend line would most likely hold as support for the buyers to ultimately push price back up. If we bring up the MACD and the RSI, the MACD is about to cross through the zero line with the coming bars. This is a bearish signal for price to continue moving lower in the market come tomorrow. If the MACD succeeds in falling below the zero line, then we will head further into negative territory, which would in turn push price lower. There is a bit of bullish divergence forming on the RSI at the current moment, with this higher low and this lower low. If you can see here, price has not yet managed to make a new low. So this in turn is what is known as a bullish divergence. And it may ultimately resolve itself to the upside in the coming days, but we will just have to wait and see. Going down into the 15-minute time frame and looking at our 200 period moving average. So price has fallen below the moving average with today's price action. This is a bearish signal for price to head lower in the coming days. If the SPY cannot get back above 568.91, then it's most likely we fall lower to fill our up gap here. It ultimately fills around 565.28. If the bears succeed in dropping price to fill this gap, it may be a point for the buyers to step in and try to push price higher. That would be most likely if the bears succeed in filling this gap, that the bulls try to step in and regain control. But if we are to fall below this 565.23 level, the price will then head down towards 561.04. So this is all the bearish scenario for Wednesday and Thursday's price action. But now let's go over a bullish one. If the buyers succeed in pushing price back above our 200 period moving average, we can then go attack our resistance level here at 573.06. If the bulls manage to break above this level, then it's most likely price heads back up and tries to make new all-time highs. Alright, that's it for the SPY. Now let's go over the triple Qs. So the triple Qs here on the 4-hour time frame. With today's price action fell below its support level here at 484.64. The bears early in the morning made an aggressive attempt to push price lower. We headed all the way down to our next support level, 478.30. And we attempted to fill our up gap down here at 475.99. But this is where the bulls tried to step in and push price back up. Unfortunately, it was a failed attempt to make it back up to 484.64. Right now we are hovering at this support level, and it may ultimately break to the downside. If that does happen come tomorrow, we should fill the entirety of this up gap. And if this gap does get filled, it may then act as a support level for the buyers to step in and try to push price higher. But if we are to fall below this level, it is possible that the bears push price all the way down to 470.81. And if this level was to break, then our descending trend line from our pennant pattern here should ultimately act as a strong support. Looks like our 200 period moving average is also residing somewhere in this level. Now if we pull up the MACD and the RSI, the MACD has crossed through the zero line with the end of today's price action. This is a bearish signal for price to continue moving lower on the triple Qs. Just like SPY, we do have that same bullish divergence though here on the RSI. Between these two lows here and the lows here, that the triple Qs has not yet managed to make a new low. So the RSI may be signaling that the bulls are going to try to step in and push price higher. To nullify this bullish divergence, the bears will have to push price all the way down and make a new low on the triple Qs. Dropping down into the 15-minute time frame and looking at our 200 period moving average, price has fallen below at the current moment. Right now we are hovering at support here at 478.30. As long as we remain below the 200 period moving average here on the 15-minute, then it is likely that the triple Qs will continue moving lower. If we are to break below the 478 level, then this up gap is where price is most likely headed, at 476.03. And if the bears manage to break through this level, then we'd head all the way down towards 470.81. That is the bearish scenario. Now let's go over a bullish one. If the bulls manage to get back above 484.64, and then we push higher above our 200 period moving average, then it is possible that the bulls push price all the way up to 490.07. And then if we're able to get above this level, then we could go try to fill our gap above head right here at 495.28. Okay, that's it for the triple Qs. Now let's head on to the VIX. So the VIX here on the 4-hour time frame has made another bullish move, and for a brief period of time broke above our resistance level of 1939. Although the VIX could not stay above this level, and we fell back down underneath, and we are currently sitting right at resistance. So if the VIX manages to get back above this 1939 level, then it is most likely that we come and try to fill this gap here at 2198. But if 1939 does hold as a resistance level, then we should be headed lower back down towards our support level of 1722. As I'm looking at this now here on the charts, this does look like a descending triangle pattern. So if we are to just take the opening and then move it over to the break, this pattern is ultimately signaling for the VIX to reach upwards of 2465 in the coming days. If we go out onto the daily time frame and pull up our MACD, it is curling upwards and headed towards the zero line. If the VIX manages to break through the zero line here on the MACD, that would be bearish for the rest of the market, and it does mean that the VIX will most likely head higher and break above these previous highs here and probably head towards 2943 would be the most likely resistance if the VIX is able to break above 2465. So this is all something to be aware of for the coming days. And now, as I close out, I'd like to thank each and every one of you for watching and being a part of high quality trades. If any of you guys have some stocks you'd like me to take a look at, drop them in the comment section below, and if I see some bullish or bearish setups, then I'll put them on the channel. I make this content from Sunday to Thursday, so make sure you like, subscribe, and hit the notification bell so you never miss an update. Thanks again, and I'll see you guys in the next video.